Hello and welcome to Money News on Newsmax TV. I'm John Bachman. Joining us right now via Skype is Jeff Siegel. He is the editor of Wealth Daily's Freedom Watch and managing editor of Energy and Capital. He specializes in energy and alternative energy investing. Jeff, thanks for being back with us.
Oh, my pleasure.
All right, so let's talk about Tesla. It was a kind of a bumpy road for Tesla throughout the year, but after taking a little bit of a fall in the stock price, that stock rebounded. Tesla seems poised to do very well in the coming year. They're expanding their retail operations. In fact, they have one retail store coming to the Boca Mall here, not far from where I'm doing this interview. But talk about Tesla and what you think is ahead for Tesla down the road in terms of their stock price.
Well, let's go back in time a little bit and look at where Tesla started. I actually started writing about this company before it went public. There are a lot of electric car manufacturers out there that were coming out back in, say, around 2005, 2006, 2007, just when Tesla was getting started. The thing that Tesla always had going for it really was Elon Musk. He had the ability to create this kind of machine. And I'm not talking about the vehicle, I'm talking about the company itself. The vehicle is top-notch all the way. And if you look at some of the other electric car manufacturers, the small electric car manufacturers that first came out, they didn't have the technology, they didn't have the management, they didn't have the capital to get it done, and Elon Musk did. Now, when the company first went public, I was very bullish on it. I personally took a position. I was really surprised as to how fast it climbed and how high it climbed. And while I'm a huge fan of the company, I bailed out earlier this year because it just got too hot. And even now, we've seen, like you said, we saw some bumps in the roads and some little bit of stabilization. I still don't think the stock is properly valued, and I suspect it's going to be a long, bumpy road ahead next year as well, regardless of how much they're expanding and how much they're growing. It's a great company. The company's going to do very well, but I do believe the stock is not valued appropriately right now, and I would stay away from it.
Yeah, there are some good things to talk about there. And you talked about Elon Musk. He certainly has the vision. And one thing that he was able to do is take the electric car from being kind of like a golf cart kind of idea into something that people would actually want to drive. Now, that's great, and that's done well for Tesla in the short term, but other car companies are certainly taking note here. Porsche has some advertising out. They're trying to go after some of those customers as well, because I know, at least in California, Tesla, the market share of the luxury car market has started to creep up as well. So some of the downward pressure that might be facing Tesla stock, is that coming from these more established car makers like Porsche and some of the other folks who have seen what Tesla have done and want to emulate that success as well in the luxury car market?
They definitely want to emulate that success. I don't think they're going to emulate it anytime soon. The Tesla Model S, and in particular, is an extremely rare technological breakthrough as far as auto design is concerned. There's some great electric vehicles coming out of all the major automakers, but they're not going to be able to touch what Tesla has done up to this point. And I would also add too that you see some of the luxury car makers trying to come out with their own version. That's not really going to do much for the electric car market as a whole. It's basically people with a lot of money that want a fancy, fun car to drive that's kind of hip. What's really going to take electric cars to the next level will really be pricing, and I think at this point it looks like Elon Musk is still ahead of the curve on that. In a few years, Tesla will be bringing out a new model. It's basically a scaled down model of the Model S, which will be affordable for most middle class drivers. I think that's going to be the tipping point. So yeah, you'll see some great stuff coming out of Porsche, and Audi's got some interesting stuff coming out, but they're not really going to be breaking much ground. I think at that point it really becomes more about just toys for people that can afford it.
Exciting nonetheless to see what's happening in the electric car market. Certainly something to pay attention to as well. Now let's focus a little bit more on the traditional cars that most of us still have. Those are the ones that run on gasoline and diesel as well. We've seen some volatility in the gas price market as well. Prices were way down, but then they started to creep back up. Looking ahead as folks kind of eye 2014 and they try to look at their budgets, where do you see the price at the pump heading in 2014 over the long term and the short term as well as we get close to the new year?
I think 2014 we're not going to see a whole lot of volatility unless, of course, something huge happens in the Middle East, which is not something you can just count out of the equation. But for the most part, we do have an enormous amount of oil coming to market, so I don't think you're going to have the volatility that some had expected to see last year, and that'll probably continue throughout 2014. I do see oil prices heading higher into around 2016. A lot of the new oil that's coming on the market in the U.S., a lot of the shale oil, it's great stuff, and we're pumping it out at record rates. But the decline rates on those are incredibly fast, which means you really have to keep drilling more and more wells just to maintain a certain level. So yeah, 2014, I wouldn't see a whole lot of volatility. You know, if I maybe see highs as high as maybe 350, 360 for gas. I don't see it hitting $4 next year.
Well, that's good to hear. I know for a lot of folks, volatility in either direction can be a little bit frightening for folks. Let's wrap this up, Jeff. I want to talk about a couple things that you've written about recently. That's clean energy, energy efficiency, and sustainable infrastructure, not only in the energy sector, but also in the technology sector. Talk to us about some areas of opportunity that you are looking at right now that some other folks may not be hip to at this point.
Well, I think the thing about alternative energy right now and clean energy in general is we're at a point now where it is being launched. Solar power systems are being deployed at a rate of something like I think it's four solar installations per minute or per day or something in the United States, something like that. We still have plenty of wind hitting the out in the Midwest going online. The problem is, as an investor, you have. Is it safe to get to the manufacturers? It's still a very very risky proposition to buy into a solar panel manufacturer or a wind turbine manufacturer. So what I like to do is I like to basically look where the money's going, and in this case we're talking about the developers. I've made a lot of money in the past on developers, wind developers in particular, but right now I really like the companies that are installing solar. Getting the energy efficiency upgrades onto buildings. There's a company called Hannon Armstrong, which is essentially a clean energy REIT. It's the only one in existence. They went public this year. It's trading around $12.30 right now, I believe. It's a good company. It's a solid company. It's a safe company. It's a great way to make some money off the growth of alternative energy without taking on a whole lot of risk, and that's why I like it.
All right, folks, look that one up. It's on the New York Stock Exchange. The ticker symbol is HASI. Jeff Siegel, always great talking with you. Thanks for being back with us on Money News.
Thank you for having me.
And thank you for watching Newsmax TV.